The following is a presentation of TFNN. Live at TFNN, the Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien. We appreciate all you tigers and tigresses out there growling or prowling with us. Right now, we get the Dow Industrials up 22, Nasdaq's up 10, S&Ps are up 8. We have, let's see, gold is flat at 16.14. You get silver at 29.28. Bonds are down 26, and King Dollar wants to take a rest, but they won't let it take a rest.
They really won't. I woke up this morning, I was looking at it saying, oh my goodness.
Yeah,
there we go again.
That little baby, folks, is at 82.84. You get the euro down 41.6 at 148. The yen is at 78.76. And bottom line, you can expect some kind of a bounce out here.
On the dollar index, I was pointing out during the during my show from 9 to 12,
yes,
9 to 10, that on the 10-minute chart, what it was running into was a supply line from 940 on June 1st. So, trying to get up here, but it's holding that little supply line right there.
Right.
Bust through that, though, and the King Dollar is off to the races again.
I'll tell you, it's intense.
Because on the daily chart, I was looking at it early this morning. I was looking at it saying, "Oh my goodness, it's just going to take off." And I went down to the intraday chart. I said, "Oh, okay, it's just coming back up here."
Right. And it makes sense where it went down. You got to 82.40. That's if we build cars like this for a couple of weeks going sideways. Let me tell you something, folks. Yeah. Get out of the way.
Yeah, because there's not much retracement at all.
No.
Just building energy to just.
Oh, and it's a beauty,
really,
man.
Yeah.
It's a beauty. It's a beauty. And the bottom line is that, technically it makes sense. Fundamentally, it absolutely makes sense. What you had out here this morning, this was so Spain is out here, and this is the first time Spain is turning around saying, "Okay, we need help.
Money. Yeah.
We need it right now."
Yeah.
So, bottom line, you're going to see a lot more of this happening. And they're going to get the money. I mean, there's no doubt.
Well, they have to.
Right. Because what you have is that what you had. Now this gets interesting because when you talk about bank runs, folks, the aspect of a bank run, of course, the funny money business, which we're all in all over the world, is perception.
That's right, for sure.
It's only perception. So once the trust is gone, if you think your money's going to be gone, you run to the bank and get it. And you can't. Let me tell you something. I ran to the bank. In 2007, 2008.
Yeah.
Make sure that nothing is over that, that limit. You remember
I remember, as soon as the money markets went below 1, I tell you, I was that afternoon, that next day, it was.
Yeah, exactly.
No doubt. I would open up all these accounts, different names. I'm just like, oh my God, this is scary.
The scramble's on. Right? So now listen to this, though. This is where the bigger scramble is. So what ends up happening is that every month it comes out as to how much there's intra-bank lending, which is huge. Okay. Well, bottom line is that the banks won't lend. It's happening again. The banks won't lend to each other in Europe.
Okay.
And that's the monster issue, folks.
Yeah.
Because
that was a monster issue here.
That did it. That did the deal.
Yeah.
As soon as that happens, that does the deal because they depend on that. Because you got to remember something. All banks are always bankrupt.
Right.
They don't have the money.
Right. If they had to liquidate,
they don't have the money.
That's right.
That's just the way the banking structure is.
They'd have to hope that all the other assets. They don't.
No,
there's just simply no way.
No, they never have the money. They never have the money.
That's right.
Okay?
Yeah.
It's you talk about Ponzi schemes. It's the biggest one, period.
That's
okay,
right.
But it's a legal Ponzi scheme, so we don't have to get wrapped up in that. But the bottom line is that if everyone went and got their money, well, the money's not there. So the bank's not lending. That's serious business. So you're going to see the IMF. You're going to see. We'll see where our Fed comes in. You're going to see that, and that's what's going to basically create the bounce.
We're part of that IMF.
We are the IMF.
Yes.
Right. No doubt. Yeah. So, last night in Asia. Well, we take a look at Asia out here. So we had, we'll see whether the Nikkei can get going. But what you did have is that she came off that bottom. So the Nikkei had just gone from, 10,200 down to 8,200. Look at that. What a trip, right?
Yeah.
You're going to love it. And
it did it pretty fast.
Oh, huge, man.
It really
Huge.
did it pretty
Huge.
fast.
100% move or move. And if you want to see 100% move or move, that's about as clean as you can get. 82.72 is the lows in December, and 82.38 was the low 2 nights ago. Come off that low. Now, how this baby, it's going to try to get into, the 8,500, which is only another $150 up. We'll see whether it can get in there with any force.
Yeah. Well, it's kind of putting things in perspective also, with the pullback not being done here in our markets.
Right.
So now you got to how's that going to wane on even some of these other markets out there?
Oh, big time.
So there's actually some other patterns that one I featured in my newsletter this morning.
Yeah.
For my clients that showed the Nikkei actually potentially going much lower.
Yes,
when especially putting all that together, and it's a clean pattern. It wasn't anything that I had to force or anything.
Yeah, no, and there's no doubt what does happen, and you better stay cognizant of this, folks, is that with our markets wanting to go lower, it's a big heads up.
Yeah, and our markets are really, all things considered, relatively strong.
Yeah,
as Larry's pointed out, as you've pointed out, when you do a comparison check to our neighbors,
yes,
we're in pretty good shape.
Yeah. Whether we're down to 825. It's so funny, man. I tell you, folks, what sometimes listening to the TV is like Saturday Night Live. And this morning was one of those days. And what I mean by that specifically is this. The market is, correction-wise, the market's not down that bad. We're only
it really isn't.
We're talking about 1,400 to 1,278, right?
No, I mean when you take a look at the move off of October 4th.
Yes.
Okay, where you really did have on October 4th, August 29th, October 4th, you had your fear indicators, you had your tick and trend,
right,
that actually work like it should have,
sure,
and put in some significant bottoms there,
right.
And so when you take a look at that price move pullback that we've had now from there,
right,
it's nothing. It's
right,
nothing major at all.
Right. Now, my point about the Saturday Night Live deal goes like this. This morning, every person that is on TV is saying that this is a great opportunity to buy. And I'm saying to myself, I mean, they don't know any other word except buy.
They don't have my report goes back to 1928 that just says here. Let me just give you something kind of simple to look at.
It is just amazing. It is absolutely amazing to me that, you want to wrap your head around this a little, folks, because there's no possible way that every single correction is a buy. There's just no possible way.
Yeah.
Do you know what I mean?
Yeah.
I was listening, and then I'm going in and taking a shower, and I'm laughing. I'm saying to myself, listen to this.
Yeah.
It's like I put on some music, man. It's like, okay,
that's a great solution.
Right. It's like, why am I going to listen to this garbage on a continual basis? This is the best buying opportunity, great buying opportunity.
Oh, it can come up with all kinds of reasons.
My God.
Except, what we are starting to see, is one at a time, not just one at a time, but one after another. That's really the phrase.
Right.
One after another confirmed ABCs on the way down.
Right.
And they're all over the place.
And folks, what Steve's saying, that's exactly how ABC structures work. Whether they're going up or they're going down. They start with 1, 2, 3, and then all of a sudden, sector by sector, and then boom.
Yeah.
I mean, that's just how markets move. So when they start moving, and because ABC is a straight line move, the A to B is a straight line move, the B to C is a big consolidation, drives you crazy, goes all over the place.
Yeah.
And that next move that comes, C to D, straight line move.
Yeah.
And it's so interesting how these straight line moves work, because if it's a straight line move on the way up, it doesn't allow you to get in the market. When the straight line move down, it doesn't allow the people to get out of the market. When I say it doesn't allow, you can get out of the market, but everyone, if they're long, they're looking for a bounce to get out. You know what I mean? And the big downdrafts, they don't bounce.
Yeah.
They don't bounce.
And, even on stock, here's a Granger. So they're out this morning. They're the leader on the way down 5%. Dollar-wise, down 9 almost $10 right now. Confirmed, in the first 15 minutes of trading, basically confirmed, blew through the B point, with volume.
And this is a monster, folks.
It is. It is a monster.
221.
It's going to take it. I think it's going to come all the way back to October 4th because it did very little retracement, got plenty of energy.
Yeah, it's $150.
And that's right. And it's right. Yeah. It's 100. It's 170. Well, yeah. That's
the
right.
structure is 150.
Yeah, that's right. I think it's going to go. It's going to do an expansion of 1.618, and it's going to go all the way back to October 4th, which makes sense.
Yeah.
And there's a couple places where it could get some.
Now look at this.
Places where it could get some help.
I just put this. I'll put it on a monthly, but I just put
I didn't even do that. But
I just put this on a longer term one. This is big trouble. Now, when you put this in a longer term chart. Yeah, there it is. The high of that is 156.
Yeah.
So, and you can make a case. Now, this is where this gets really wild, folks. You make a case that the thing will go down to 86.
That's right. Yeah.
86 from 210? Yeah. Oh, really? 220? Yeah. So what are they saying? They're saying that all the insiders are selling and we want your money? Let's see. What are they saying? Drops.
Yeah, I didn't see anything out there.
Industrial cycle is over. Well, we'll see where that shakes out, but that is a big number, no doubt about it.
Yeah, so they're just popping up, one after another, after another. So, whether it's inside the sectors, inside the
right.
You get the, XLF is popping up probably a little bit this morning, but it's got a confirmed ABC down.
Right.
They're all over the place.
And here's another one. Look at this.
Okay, I didn't even look at Akamai.
This is Akamai, folks. Yeah. Akamai.
Sure enough.
And Akamai. Let's see. She's already done more than the B point. Oh, my God.
Yeah.
Now, she's also doing 100% move, so she's going to need more juice. But, 25.50 hits 25.90.
Well, you take a look at that. It was trading near $40.
Right.
A month, 2 months ago, 3 months ago, maybe.
Wow.
And, and you're all the way down to $26.
I know.
That's
quick.
Big. That's
quick.
Big haircuts. 30%.
Right.
35%.
And you can see this. Now, check this out. This is volume off the highs in February.
Yeah.
Monster volume. It made a high. So check this out. On a monthly, folks, it made a high with 78 million shares. $54. Oh, that's 2010. Sorry. Okay. But that's what it did.
Pretty amazing, though. I mean, you bring up this long-term chart, and you click all the way back into 1999.
Yeah.
When it's up at 350.
Right.
I mean, holy cow.
Yeah. I remember that well.
Wow.
Yeah.
Oh, my goodness.
Because you want to hear something wild, folks, on a fundamental basis? So, Akamai Technology, you got to remember something. We've been streaming. In fact, when Broadcast.com went public, okay, it was TFNN, Microsoft, and Intel inside their prospectus. Inside the prospectus.
I love it.
Okay?
Yeah.
Because we were the largest streamers in, this is going all the way back in 1998, 97 maybe, 96.
Yeah.
It was right in there. And what ended up happening is that I ended up calling my sales rep at Broadcast.com saying, hey, you're going to give us a break. Because picture this, folks. This is amazing. So at that point in time, I'm looking at this prospectus. I'm saying to myself, this is crazy. Now, just think of how many people, I knew that the business was going here.
Yeah.
But the bottom line, you know how many people were listening on the web? 352.
I love that.
352. Now, you know what it cost me a month for those 352 people? $5,000 a month I was paying.
Goodness.
A month. We come back.
Times have changed.
I'll tell you the rest of the story. It's pretty wild, folks. This is Steve Rhodes, Tom O'Brien. Oh, you Tigers and Tigresses, we appreciate you growling and prowling our day with us. Dow's up 10, Nasdaq's up 12, S&Ps are up 7.5. We're going to be right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us. The Dow right now is up 24. NASDAQ's up 16. S&P's are up 9.5. So if we stay with this for a second, so picture this, folks. So broadcast.com goes public. At that point, I was on the radio as I am right now, not on 20 stations as I am now. I was on like 3 maybe.
Yeah.
Maybe I was on 2. No, I was on 3 stations. And so there were 352 people listening on the net.
Yeah.
Well, Akamai, one of their sales reps, after they saw that, they called me up and said, listen, we can do a better job for you.
Yes.
So what was happening there is that we went from about 352 people to 500 listening, right? I said, okay, what's the deal? They gave me a deal. So picture, we were paying $5,000 a month for that many people. I said, okay. Akamai came in, I think, at $3,800. I said, okay, do that. Bottom line, and this is what you want to wrap your head around about even in the 90s in general, just technology in general. They say one thing. Bottom line is that Akamai couldn't handle the load, because what happened at that point is that all 500 people would always come on at the same time.
Okay.
So they couldn't handle the load, right? So I'm, saying, I can't believe this. So I went back to broadcast.com. But now watch what happened. Between about 98 and 99, they really got it together. The load balancing got together.
Yeah.
The servers got together. Because you hit the service and bring it up.
Yeah.
Now I'll fast forward you to today. So what ends up happening today, the way we distribute it now, we have all our own servers inside a server farm and all that. But now, so it's a lot. It's 14 years later.
Yes,
but
exactly.
now, folks, okay, we can get hit simultaneously with 8,000 people hitting the server at the same time, and you won't skip a beat.
Yeah.
And I can do that more, but we get
Right,
four
right,
that I can do.
right.
You know, so it's interesting how far it's actually gone.
Yeah.
But isn't it interesting that these technology companies at that point, Akamai in particular, they claimed they could do it.
Yes.
And that they also claimed, now this is what I got, especially when I'm out there selling advertising, what they were claiming also was that how big all these people were, right?
Yeah.
And folks, it was absolute lies. Absolutely. Because what I used to love is I'd go somewhere and I'd say, okay, well, how many listeners do you have?
Yes, right,
and they tell me.
right.
And I says, okay, bring that up and let me see this.
Yeah.
And no one would ever show you the numbers. And they couldn't show you the numbers because I knew they were lying. Because I knew the technology wouldn't support the deal. Isn't that crazy?
I love it.
It's unreal. Let's go to Jack in Palm Beach. Hey, Jack, what's going on?
Hey, how you doing?
We're doing great, man. You having a good day out there?
A really good day, actually. Thank you.
That's a beautiful thing.
Good.
Yeah. I'm just curious, though, having listened to you for a while, why would, I'm talking about the IWM now,
Yeah.
after confirming an ABC down and making it past the B point,
Right.
why would it stop in the middle of the stairway on the way down to the next floor and go back up?
Because this is a great question. Because what you have is this. Now, I use this analogy all the time, folks. Whether you're going up or going down, meaning a three-family house and you get stairways. There's a stairwell on the left-hand side that's pretty dramatic, and that stairwell, folks, is December 13th. December 13th had 79 million shares. You see that high there is 74.47. If you're watching, that's what's stopping it. And we came down. What happened is this week, see, the IWM is absolutely a confirmed ABC down. It's the only one inside the indices that the Russell 2000 index itself did, plus the IWM did. But it was smacking right into that high volume, and that's what stopped it.
I see.
Yeah, isn't that cool?
And,
yeah, I know.
So where do you see the bounce going to from here?
Man, I'd love it to. Well, you didn't. Let's see. He said, "Where do I see it going to?" Not what I love it to go. Okay.
Yeah, exactly.
Now, I'm with you. Okay. So to see where it's going to, I suspect it'll talk today. If this can close at 74.49, which is at 74.40, that would get it back up to 77.91, and it could get it into 78.14.
I see.
That would be the short position on this is up at that 78.14, and it would be really cool because what happens is this: because you have a confirmed ABC down. If this turns into a complex one, which it very well could, what we're still going to have, which is so sweet, is that you have that high volume spike run across the B, plus you get a weekly high volume spike.
I see.
So that'd be a gift from the trading gods.
I see. Okay, so today's bounce is not shortable, in your view.
In my view, no, it's not. No, there's going to be something more than this. What gets wild about a market like this is most of the time in a bear market, the spikes will come out of nowhere, so you really need patience, right? And then you just got to cross your fingers and cross your toes that you get it.
I see.
Now, that's the hardest thing. I'm only kidding about that, folks, but I'm really not, because what happens is that this market is so weak.
That's right.
That, the downdraft, but money management-wise, you got to sit there and wait for it, man.
No, I see what you're saying. No, that makes sense. Thank you very much.
Have a great one, man. Have a safe one. Steve Rhodes, Tom O'Brien, all you tigers and tigresses, you stay right there. We're going to be coming right back.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his Market Take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here to us. We got the Dow right now up 12, NASDAQ up 12, S&Ps are up 8. Let's go to Mark in Concord, Mass. Hey, Mark, what's going on?
Hi, Tommy. Hi, Steve. How are you two today?
What's happening, man?
Wet, rain. That's what's happening. And the forecast says rain through at least Thursday, if not Friday.
Oh.
So I'm going to have to call Noah, see if I can borrow his ark.
I love it.
A question for Tommy. Thomas, two questions, actually. First of all, I know you're a real estate bull and a housing bull. My question is, assuming that we get the pullback that we all think is going to happen, would you... And I'm looking at this as an investment, not a trade.
Yeah.
Do you buy the housing stocks, a potpourri of them? You know, a couple of shares here, a couple of shares there. On the housing stocks, and maybe even Depot and Lowe's, Home Depot and Lowe's. After the pullback, before the pullback, during the pullback.
Okay, so let's talk about this. Okay, so housing in general, folks, okay? And if you didn't know this yet, we opened a fund. If you happen to be an accredited investor and you're interested in the real estate market, you can email tigerfund@tfnn.com, okay? That's separate than what we're going to talk about now, but let's talk about housing in general. So if we look at Toll Brothers, now the thing that is amazing, in my last 30, 35 years, bottom line, folks, is that the last two corrections in housing, I'm not counting the one that just happened, they were just as bad.
Yes.
It just depended on where you were in the country. The difference with this one is that it was right across the country, and then the stock market crashed simultaneously. In each one of those, it not only comes back, but it comes back in an extraordinary way. And there's going to be no difference in this one. And in fact, this one, I suspect is going to come back even heavier, better. And the reason that I'm saying that is twofold. The biggest part is that you can buy houses right now about 30 to 40% under what you can build them. They cash flow positive. The last time that this happened in 90 was 89 and then 91. They they cash flow positive, but slightly, not as much as these are. These are cash flowing positive so quick it's insane.
Yeah, and when you have that type of price destruction and you've got these low interest rates, it makes that a much easier formula.
Huge. Yeah. So then you have the demographic, and the demographic I'm talking about, folks, is that the demographic that's coming up is as big as the demographic for the baby boomers.
Well, like you were talking about yesterday, what you experienced, what you saw out in Las Vegas.
It's huge. And the demographic I'm talking about, folks, is going from 24 years old to 32. They're coming into their prime. It's huge. And
when they can get jobs and we push them out of the house, then...
well, those kids had jobs out there. Let me tell you, they're spending $1,000 a day. They got jobs. Their mothers and fathers might have some money, but they got jobs. So when you take that aspect... that's just saying to me that this thing's going to come quicker than people realize. So now let's talk about Toll Brothers for a second. Toll Brothers, if we put this on a 5-year chart, what you have is this. The bottom came in about a year ago. Mm-hmm. Okay? Mm-hmm. We just went from $13 up to $28. It blew away let me put this in a monthly. I'll put it in a monthly. Okay. What you have is that, this is a classic. It went up. It not only went up, though, but it went up with volume. Okay? It has a high out there of $28. It has volume. It has everything. Okay, so now the question is, where do you buy it? I would wait till this whole correction is over, probably, October mark. Okay?
Okay.
And that's where you're going to be all over these. And it'll be Toll Brothers. I would get my head wrapped around Lowe's. Lowe's is going to have a vicious correction. It went from 32 down to 25. If we pull this back further,
I would say. I'm thinking about 4 or 5. 4, 5, 6 different ones as a long-term investment, not as a trade.
Right.
Yeah, no. You have to let them get a lot deeper though. Like Lowe's, Lowe's can turn around and get into $13, man. So
Lowe's is not. I think personally, Lowe's is not as financially stable as Home Depot. Personally, from what I know of them, and I buy a lot of stuff in both. They're both ABC downs now. If I look at Home Depot went from 38 up to 54. Back. It's already set up that it wants to get back lower, but it makes sense because we've done a huge run.
Right.
Exactly.
Now, if you want to see something, folks, now check this out. This is where we always talk a lot about what you hear versus mathematically what's happening.
Yes.
Okay? So watch this. I'm going to show you a chart. Oh, I hope I can get this. I just had it. 1 second. Oh, okay, hold it. I'm going to show you a chart of just the acceleration in housing in 1 year. And it'll blow your mind. It is the biggest acceleration, I believe, since 1969. So it's already happening.
Yeah.
Yes. And I just lost the chat. I'll get this chat before we go off the air, folks. So,
Tom and Steve, one other question for both of you, different subject. Tom, last week you were talking about the Dow. I follow the Dow more than the S&P.
Okay.
I know that you two follow the S&P more. But my question is, last week you were talking about the Dow going to, I think, 12,710. Where do you foresee the Dow heading now in the last couple of days? I know you were away Thursday and Friday. Where do you foresee happening on the Dow, on this bounce?
Yeah, it'd be tough to get up there. I mean, if it can make 12.6, it's going to be doing good.
Yeah. All right, guys, cooking, as you would say, guys. You have a profitable day trading. Thank you, and you stay dry down there in Florida.
Thank you. Have a great one. Have a safe one. And, folks, if you do want information about the Tiger Fund and you are a accredited investor, you can give us an email at tigerfund@tfnn.com, and there's going to be a website up by tomorrow. So
cool.
But it's dynamic, and I'll find this chart. This chart is insane.
Yeah, it was.
This just came out this morning. I can't. I'll get this chart, folks. And what came out this morning was the acceleration. That is, it's already happened. I've seen it. I mean, so it's going to get interesting how this whole thing shakes out.
Yeah, and Toll Brothers, could be, just as you were pointing out to Mark here, could be a really nice setup on the pullback. Pull back okay, and don't know whether it's going to be $19 or $22 or $16, wherever, but...
And it's going to be... what's sweet about that, folks, is that it has volume at 28, So this is going to be a big correction because, you know what, when they take the market south, they take all the good babies, the bad babies, whatever color babies they're all going.
That's right.
Oh, my God. I'm telling you, man. Okay, so let's take a look at some of the Dow stocks out here. Mark was more interested in the Dow. You get IBM is up 78. That's going south. Big Mac. Big Mac is up 10 cents, and bottom line is that...
it's a confirmed ABC down.
Yeah.
And
it's trouble in
which
paradise.
Is amazing. When on Friday when I was looking, I was like, oh, my goodness, look at this.
Look at it. Blew it away.
Yeah.
And that could be intense.
That's exactly.
Yeah, let's put this on a
guys
weekly.
How is you would think even in a poor economy, McDonald's is going to do well.
Yeah, and look at what's sticking out. $77 is sticking out. So, David and I, because we were doing the show on Friday.
Yes. While you were gone, and so he was saying that it's just simply the problems over in Europe.
Right.
So they've got a lot of their income. Profits coming from Europe, and so still, I would have thought McDonald's would do well in any type of bad economy. Walmart would do well in a bad economy.
They're absolutely growing in China. The McDonald's biggest fear, I would say, is that people want to get healthy.
Yeah.
If people want to get healthy, McDonald's going to be in trouble. And
they got Bloomberg, Mayor Bloomberg, right, getting rid of the 16 anything over 16 ounces.
The granny, Mayor Bloomberg. Thank God. Anyway, Bloomberg is, I just particularly don't. I think, see, kings and queens I don't like, folks, and Bloomberg to me is that typical person that, we're the slave market and he's the king.
Yeah.
No, I swear to, and I'm not, some people just think they are, and I think he's one of them. And that he absolutely just thinks that, he knows better.
Well, and so he's proven it by saying, hey, getting rid of all the big gulps.
Yeah. No, I
know. Bigger gulps.
And you see that makes the case. The thing that gets interesting here is that if I just separate my own personal opinion versus, what he's specifically saying, and this is where
I can take better care of you than you can of yourself.
Well, no, where he's getting into, which he's a really good business guy, there's no doubt. Look, we're looking at a Bloomberg, and I pay a fortune for it, and have for 14 years. What he's saying specifically is that, hey, listen, all the taxpayers are paying for all these people, obesity, and it's killing the tax people. And do you want me to come back to you for more money?
Yeah.
So that's his argument on the other side, which is a valid argument.
Yeah.
Now that's where it absolutely gets into, should healthcare costs be more controlled? And they should, but I can tell you that if you're growing up, folks, if you are in a business where someone else is paying for the product, that is the most lucrative business, right?
Yes, that's
period.
Right. That's right. Absolutely.
Because no one's paying attention to the money, and that's what the health business is all about.
Yeah.
The health business is that someone else is paying, meaning we are paying or the insurance companies are paying, so the product line is way too expensive.
That's right. That's right.
That product line is over the cost, dramatically over the cost, by thousands of percent, not hundreds of percent.
Yeah.
And that is the larger issue.
Yeah.
And because it's so built into the system, it's going to be very hard to crack that.
Right.
You can say you want to crack it all day long, but there are so many folks that say, no, me first, I want this, let's cut something else.
Yeah.
Because when you get in those systems, it's very hard to get out of them unless, you're, doing something that is, over the top. I mean, you know what blows my mind? What I never realized is that you can get, I was reading, I'll tell you folks, we love Florida, but Florida's got some weirdos. I mean, we get some of the craziest stories in the world down here, right? And I was just, don't we? I mean...
Well, I think every state has them. But
I don't know about that. I'm telling you, man.
How do I start picking on states? So we'll just focus on ours. We'll focus on ours.
I'm going to have people knocking at that door pretty soon by the time we get off. But what I never realized is that how many times basically doctors can actually get, pushed out of the business and then come back in.
Oh, okay, as far as having their license.
Yeah, that's pretty intense, man. We get a father and son battling it out down here about a bunch of bread folks. And I was just reading it, and they're both doctors, and, the kid's trying to take the father to the cleaners. And, I say kid, he's 56 years old now.
Yeah.
But it's amazing that he's been suspended so many times for doing drugs himself, and they still give him his license back. It's like, I can... Anyway, it's strange. I mean, that's a strange deal.
Yeah.
I'd hate to be a doctor having a drug problem. That would be a tough one to get out of.
Yeah.
You can really, right?
For sure, because that's right.
You're writing your own scripts. You get on those,
bad news.
Heavy scene, man. Okay. High volume stocks. Let's see what we got out here. Bank of America's up 16 cents. You get J.P. Morgan Chase up 85. Oh, we got to talk about Corzine. Corzine is going to be interesting. Let me go through these first. EMC's up 55. We got Hewlett Packard up 62. We got Apple's down 189. And Apple just won't give it up. It's building some cars here, to get lower, but it just won't give it up. What's going to be interesting is that so you had one of the trustees today come out with a report.
Yes. And
inside that report, they're saying, hey, there's 3 of them that he thinks he's going to go after, including Corzine.
Okay. As far as because of more knowledge.
Because
what it's led on to?
Yes, exactly. Okay. Yeah. That they absolutely knew they were taking customer money.
Yeah. I mean, that's the big issue out there.
It's the huge.
That one will hang them.
Yeah, that's fraud.
Yeah.
He's stealing money.
Yeah.
The bottom line is that's stealing money. You can wrap it a million different ways.
Making business mistakes, running a business, and that's
with your own money,
you don't go to jail for that.
No, but if they dipped, if they can prove that they dipped into the customer money and blew their brains out, well, you know what? He's got some problems.
Yeah.
So what's really wild is that inside that, so the guy's name is Gideon, folks, but check this out. This is what's really going to be crazy. He is fighting Louis Freed. So Freed, remember, used to be the top FBI guy.
Yeah.
Well, what happens is that because Freed is the trustee for MF Global, it's his legal responsibility to make sure that he does fight him.
Yeah.
This is where this gets really wild.
Yeah.
Okay.
Yeah.
So picture Freed, who used to be in the charge of the FBI, is the guy that's going to defend not only the company but all of those.
Yeah. Right.
Not individually, but he'll have to defend the company because his legal job is to do that.
Yes.
Isn't that crazy?
Yeah.
This is where I can see that. Why folks would really want to get into the law, because when you really get into that and really think about it, say, okay, what is the law? What does it absolutely say?
Yeah.
And what can we do to defend that? Whether it's wild, all right.
Well, hey, you got the top guys in the law business, right? The Supreme Court going to be handing down a judgment some point in time, or opinion.
Yeah.
At some point in time here in the next summertime. Can you believe it? Summertime.
I know, summertime. Oh, my God.
So they're going to be discussing the health care bill. And
well, that's going to be the big one. That's going to be the big one.
I don't know. I don't know when they go for recess, but I don't know if it's, got to believe it's sometime, it's June or July.
Yeah. No, that's going to be absolutely huge. There's no doubt about it.
It's kind of amazing how quickly summer came.
Right. Oh, I got it. Oh, I love it.
Okay. Yeah, you're going to have to say
So where do you see this, folks? Okay. Let me give you the numbers again. I got the chart, too, when we're talking real estate. Okay. So watch this. You stay right there, and we come back on to give you these numbers. These numbers are going to blow your mind, folks, about what is happening in housing right now. Steve Rhodes, Tom O'Brien, all you Tigers and Tigresses, stay right there. We'll come right back. Thank God.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Kate Stalter on the Small Cap Roundup, Tuesdays and Thursdays, 11 a.m. Eastern. Up next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us. If you happen to be watching Tiger TV, folks, what I just put up is this. I put up the year-to-year change in the median price of single-family home resales. Now, check this out. This is just so where it's at. It's unbelievable. Bloomberg just put this chart together this morning, but this is what it is, okay? The April increase in the median price exceeded March figure by 7.6 percentage points. That's the steepest climb since 1969. Yeah. Since 1969. Now, we know, and what you have, folks, is this. In Florida, you have 3 markets. You have the market, bottom line that, realtors, good deals. You have the bank market, foreclosures, good deals. Then you have the bank steps, which is over the top.
Yeah.
So it's intriguing watching this whole thing shake down. But what this has to do with, flat out, as far as I'm concerned, it has to do with their cash flow positive, ASAP,
yes,
beautiful neighborhoods, huge quality of life, and you're buying them about 30 to 40% under what you can build them for.
Yeah.
It's a big number.
That's right. Then you factor in the long-term interest rates, financing rates, and you're...
Forget
it.
It's
a good deal.
It's pretty amazing. That this chart, if you're looking at this chart...
How about that home that Paulson bought?
And Aspen. He's listening to us right now.
I love it.
He's out there in Aspen listening.
He got a pretty good deal.
Oh, $50 million.
$149 million.
Was it $149 million?
No, that's what it was at the peak.
Oh, he bought it at 50.
Or maybe that was what the Prince bought it for. I don't know.
That makes sense.
And he bought it for 50. Plus, he got another property thrown in there on the side.
Nice, huh?
Yeah.
If you look at this chart too, it looks like an ABC structure on the way up.
It really does. Which is great.
It's pretty wild, folks. So, bottom line is that there's action out there, and it's big action. Okay, so let me see.
Yes, make sure you save that one.
I will. I'm gonna.
So I have to be hunting it back in.
I know. I gotta close it right now, though, so I can get. There we go. I close that so I can get the rest of the market up. So, what you have out here today, folks, you stay right there because I'm going to be going to beautiful Santa Fe, New Mexico. We get Kate Stalter coming up with the small cap roundup. Then, Victor Jones, we're going to Thinkorswim headquarters in Chicago for the option hour with Victor Jones.
Yeah.
Then going to California. Today's a beautiful day. I love this lineup here.
Right.
California with Ken Shreve from 3 to 4, and then back here from 4 to 6.
Yeah. Now tomorrow, folks can spend 4 hours with you.
4 hours.
4 hours.
I'm doing
4?
I'm doing a workshop in Dallas, Texas tomorrow at the
reunion,
the Hyatt Regency reunion.
Okay.
That's for the Traders Expo. That's from 12 to 4. So if you happen to be out there, folks, if you want to register, you can register right at TFNN. It's free. Nadex is sponsoring the deal. Darryl Martin's going to be with me out here. Dan Cook's going to be there. We're going to be growling and prowling for 4 hours.
Yeah, that'll be great.
Yeah.
That's a good time.
I haven't been in Dallas for a while either. Dallas is always a good town.
Oh, yes.
But you know what time I got a flight out in the morning? 6 o'clock.
Oh, baby.
6 o'clock. I get there at 7:30, and I'll be on the stage at 12.
Oh, man.
Yeah, I know.
That's going to be a good early night's sleep.
It's going to be
but having traveled with you, we're used to those early flights.
That's right.
That's just normal.
No doubt.
Early bird, folks.
No doubt. Now, for all you guys out and women out in Portland, right? If you haven't heard that story yet, Steve thought it was cold out there. I wish I had a picture of you that day. That was so funny. That was great. No, I'm not kidding. There absolutely was. That was a classic.
Look, it gets below 70 degrees. I think it's cold.
Folks, you get a picture of this. I thought he was only kidding, right? And he's looking at me like, I can't believe how cold it is. And it was only like 55 degrees out.
No. It was pretty. It was. I don't know.
Was it colder than that? Was it 45? That was funny, man.
I love it.
Steve Rhodes, Tom O'Brien, appreciate it. Growling and prowling out here with us, folks. You stay right there. Kate's going to be coming up with you. Then Victor Jones, Ken Shreve, and back here.
4 to 6.
4 to 6. Have a great one. Have a
Take care,
safe one.
folks.